Hey everyone, Mortgage Nerd here. Are you waiting for property values to drop before you go out and buy something? Let me show you the math. Remember, numbers don't lie, people lie. Let's show you the math. I'll show you how much money you could lose if you wait around for values to drop, and they might not drop. Because the real cost here is the tens of thousands of dollars you'll spend when rates go up and you're forced to get a higher rate and maybe values went down. So at the end of 2018, beginning of 2019, rates were about 5%, APR 5.12. If you bought a property at $450,000 back then, you put 20% down, your payment would be $1,932 a month, almost $2,000, just $70 under $2,000. So that's what you could afford. We're not counting taxes and insurance, but that's what you could afford at the time. So let's fast forward to now, where you could get properties at a rate of 2.99% if you qualify. That APR is 3.085. So let's see what that looks like. If we look at a $600,000 property now at 3%, I already gave you the APR, that payment, again with 20% down, is $2,023 a month. It's less than $100 difference, but you're $150,000 more on the purchase price. That's the purchasing power. That's the difference between a 3% rate that we have today and a 5% rate that was around a year and a half ago. Might be back a year and a half from now. Go ahead and keep listening to everyone who says, don't do anything, don't buy, wait for the market crash to come. That may never come. And if it does, okay, you bought this property at 600, let's just say it drops to 550. It'll come back up. And everyone that buys later is gonna have a higher rate and a higher payment. We gotta think, guys. We gotta think about all aspects of this. Don't just think about the market crash 12 years ago. That recession was because of the housing economy. That recession was because of the housing bubble. This recession has nothing to do with housing. Housing was strong. Housing continues to be strong. Far fewer people qualify for a mortgage today. Far fewer because of COVID-19 overlays. That means guidelines that are stopping people from getting a mortgage because of COVID-19. A bunch of programs don't even exist. You have to have higher credit scores. You have to have, some cases you need 12 months of money of reserves in the bank to qualify for a mortgage. It's much stricter now, yet the rates are so low that purchases are starting to boom. Do not sit on the sidelines waiting for something that might not happen. A bird in the hand is better than two in the bush. I use that saying all the time, because taking something now at 3% is way better than waiting for it to come down and then the rate is 5% and you can't afford it anymore. Phil Stevenson, Mortgage Nerd. Thanks.